yes at the moment. What day is it? It's Tuesday. Tuesday low of the week on the cards. But we're quite clearly inside this H1 breaker block. Someone just sub. Holy roller. Thank you, brother. Not sure if you're on the stream, but that's all cool. Good morning, Eric. Good morning, good morning, good morning. Plainview Poe. Have you changed your name, Poe? Plainview Poe. So yeah, that's cool. But yeah, this 15-minute rejection blow, you can see our price respected that before getting a little bounce. Not something I want to get involved with. Just jump down to 1 minute quickly. It's a session of wicks today. It's a session of the wicks, right? So when I was talking to you about my my long that I took this morning, just for clarity, this was my long. All right. The reason why I got in here, so I told you those reasons that I mentioned previously, the order block, etc. But also we had confluence with this wick, right? Okay. And so 50% of this wick was inside what? Well, it was inside this BISI, sorry. Inside this BISI. So CE of this BISI, on its own would not be enough for me to validate a trade long, right? But in conjunction with this wick and having C of this wick, in conjunction with having an order block, in conjunction with sweeping previous sell side liquidity, in conjunction with price wanting to drive higher to run back into that weekly wick, right? And to take out this buy side liquidity, in conjunction with running down to 1.5 times standard deviation, gave me the bias to go long. Right? In an environment where I am anticipating search and destroy type conditions. Right? The day after, a half day is always likely to be slow. Okay, this is where we're likely to see this type of price action. So all of those reasons were the reasons why I took the long. Right? If we go back onto our new weekly opening gap chart, what do we know about consolidated price action? Well, it's often going to want to revisit new weekly opening gaps, right? Price is often going to want to gravitate towards these new weekly opening gaps. So when price is consolidating, you often get this sort of price action, right? Bouncing either side of your NWOGs. So this is why I'm anticipating price to want to keep getting pulled back up into this NWOG. I'm not sold that price is just going to want to completely melt. Right, so I'm always looking for opportunities for price to be taken back up, and then once it's up here, then I'm sure I can look for it to go down again. But there's a part of me in the back of my mind which feels that this is a minor retracement before the next leg up, right, for one final push. Right, everyone's going, oh, the market's dumping, we've hit the ceiling, right? You know, we've hit 4,500. You know, the market's going to die from here. I'm not so sure. You know, it's exactly the type of price action that, you know, the market makers are going to slam against. Okay. And as soon as people go, oh, fuck, John Cramer was right. You know, we're going to get those new highs. Right. That is when they slam the market. Right. So once we get this breakout, take on this buy side, and then I'm looking for a dump. So I'm not sold on this quite yet being the move. I could be proven wrong. Of course I could be wrong. But being a cynic, and often being right in terms of the way that market makers print price. These two down close candles could be seen as an order block for future green candles to run price higher, right? These order blocks. So I'm not completely sold that price is looking to melt at this stage. Do we have any high impact news events this week? Let's have a quick look. We've got Fed Chair Powell testifies. What's he done? So we got quite a big news event tomorrow. We've got the money printer Powell speaking at 10 a.m. On Thursday, we got some Bank of England stuff going on, some important news coming out there, unemployment claims and monetary policy, official bank rate. That's a huge one, the official bank rate for the BOE. That's big at 7 a.m. tomorrow. And Fed Chair Powell testifies again on Thursday. God, he's in for a big week. And then on Friday, we have the flash PMI. So guys, we have a lot of news coming up this week. Expect some volatility later in the week. So this could be a day where we see some consolidation. So again, I'm not looking for huge range today. It's another day to build into the week, right? We build into it. Took some lovely trades yesterday. Absolutely nailed crude. Took a really nice trade on ES. So today, just slowly building into the week, right? Don't need to mess up our weeks. Don't need to give back any gains that we made yesterday. Don't need to force a trade. Just take things nice and slow. Nice and slow. So yeah, 2-time standard deviation on the yesterday's retracement. So this retracement leg extended it out. 2-time standard deviation takes us to the upper quad of this BISI. But for me, I'd need to stack confluences if I'm looking at that. We do obviously have this. What? We are obviously inside this H1 breaker, right? Huge level. Very, very important. Which is, the low of that is 26.25. So I know I'm saying 24. So I'm not saying I'm going to get in 24. I'm not saying as soon as it hits 24, I'm going to press buy. That's not how it works, right? I'm looking in that area to see how price respects it, to see if there is an entry to take. Do we get a purge on immediate sell side? Do we get a market structure shift? Do we get a fair value gap left behind? Do we get a 2022 if variation? Do we get, a multitude? Do we get another rejection block that forms? Anything along those lines to frame an entry in that area. If nothing of that exists, then guess what? There is no trade. But inside of this BISI is where I will be looking for price to show me signs that it wants to reverse and head back up towards that new weekly opening gap. We've created relative equal highs on the Asia high. So the time I'll probably be looking to trade is around London close. That's probably when I'm going to be looking to trade ES around the London close time to see if we can get price to bounce off that area. I don't particularly want to trade in this area. We're at 62% sure. We're inside this fair value gap, sure. But we've just got this gaping liquidity or inefficiency in price. So this buy side delivery, which hasn't been efficiently balanced on the sell side, just sat there. Sure, you could argue that that's a breakaway gap on the hourly, but equally in the same sentence, when price has taken buy side, price is usually going to revisit breakaway gaps, right? which is holding me off going long in this area. So which is what's holding me off going here. I took this long because this was just an easy, essentially a scalp with 7 or 8 handles. Gets the day off from running. But if I'm looking for a longer hold, you know, I want to be trading in the direction of the day. And if I'm wrong, I'm wrong. I move to the sidelines. But this is the area I'll be looking to frame an entry inside of this BISI, right? But I'm certainly in no rush to jump in a trade here. None whatsoever, all right? You know, my area of interest is down here. And I'd like to see price get up to, I think it's 55 is my first target. Back up into the upper quadrant of that BISI, sorry, on the daily. So this is the sort of range I'm really working. I'm not looking for huge amounts today. And because of that, I don't want to be trading in here. I'm picking my levels, and these are the levels I'm interested, right, in. So this is not an area where I'm interested. Patience, guys. Patience, patience, patience. Wait for the trade to come to you, right? Don't force your will onto the marketplace, because you'll get humbled very, very quickly. Bomb, bomb, bomb. So yes, some interesting, what everyone think of the T-GIF. The T-GIF, what's everyone's thoughts on T-GIF? Like it? Don't like it? How can you not like anything, some new information from ICT, huh? Just another string to the bow. Anyone got any questions about T-GIF? For anyone who is British, it did make me chuckle. Because we have a restaurant called T-GIF. I don't know if you got it. I don't know if you have it in the States. Do you have it in the States? You might do. Seems pretty fucking American to me. Like this, it's like a restaurant train. It's like a full-blown restaurant train. Like TGI Fridays. They're like, you can't use that, And by the way, their ribs are next level, right? Then their ribs in barbecue sauce. Ha bosh! Ah bosh, ah bosh, ah bosh. It's a full rack of ribs. You get a side of chips and a weird little pot thing. Oh yeah, baby. Talk to me. That's all I eat. Just go in there and just give me a rack of ribs, mate. Just a rack of ribs. And then my missus is like, I'll only have half a rack, baby. I'm like, you're gonna get a full rack, right? Because she can never finish a full rack of ribs. So guess what? I get a rack and a half of ribs to myself. It's like a full-blown feast. I'm in dream world, right? She needs to wheel me out of the wheelbarrow. It's going to an absolute food coma. Eating the old ribs. But they use this sauce. It's like what is it? 10. I don't know if you're listening. 10. What's that sauce they use? TGI Fridays on their ribs. Oof. Ooh. Pink tally. Oh, what's going to bug me now? I think it's how is it called? Ah, yeah, Jack Daniel's sauce. That's it. Jack Daniel's sauce. Jack Daniel's barbecue sauce. Bourbon glaze. Yeah, boy. It's Jack Daniel's though, isn't it? That's the real shizness. It's the real shizness. It's making me really hungry as well. It's like, what time is it? I don't know what time it is. It's like, well, it's 11:30 here. It's lunchtime, to be fair. I was going to say, like, wanting ribs at 6 in the morning. It's pretty weird. Pretty weird. But yeah, just expecting price to chop around in this little area ahead of the open. But yeah, just in terms of TGIF, I can give you something quite interesting to add into your understanding of my models. So for those of you who are inside Red Pill, you'll know my models. But we can just take a quick example. Just take an example of crude. So if we go to yesterday's price action, right? So we're going to focus on this. So ICT dropped in a hint there. You know, he's talking about thank God it's Fridays, right? And using a weekly extension, so a week where you've had 4 consecutive days that are green, right? So 4 consecutive green days that are up close, and that is extended price action, okay? Now, if you can combine that with price on the Friday hitting a higher time frame PD array, in this instance on the ES, which we traded. So for those, again, who are inside Red Pill, we absolutely slayed the markets on Friday because we actually shorted the very top off the monthly order block. Then you have the groundworks for TGIF, right? The extended price action during the week for the 4 days. Then you get to a higher time frame PD array on the Friday, which was the monthly order block in ES's example. And then you look for 20 to 30% retracement during the PM session on Friday for price to reach into, right? Now, he threw in a little hint that you don't necessarily just have to use this premise on Friday, right? You know, as we know, time is fractal, and you can use this in various different examples and scenarios. Well, one scenario where you can use it, ladies and gentlemen, is the New York AM session reversal. Right? The New York AM session reversal. So let's have a look. So for those of you who know that New York AM session reversal, Asia range, Asia lows not tagged, London runs into OT of the previous price leg, then we're looking for price action to go and run into a higher time frame PD array. This is crude. Okay, so at no point has any of this really been rebalanced. Okay, so when we get into New York, the AM session, this is the New York AM session reversal to come and take this liquidity. Well, guys, do we not have exactly what is being explained in a weekly, now down on a daily, just over a daily's kill zone period, different kill zones. So in essence, you're treating this, and I'm not, this is just hyperbole, right? This is a metaphor, but you know, you could use in your mind Asia as Monday, London as Tuesday, Wednesday, Thursday, right? This is your week. This is your week's expansion. Just now it's condensed down into a day's range using the New York AM session reversal, right? So we had this extended price action into a higher time frame PD array. Well, the higher time frame PD array in this example was an hourly H1 order block and breaker block. And we actually traded this short yesterday, right, on crude. This was the trade that we slayed yesterday, right, using this model. Okay, so now we can put across our TGIF fib. TGIF, which is not there. Why is that not there? Well, that's annoying. Where's my... Right, bear with me, we're going to have to make one. Jeez Louise, being sketchy as fuck. I'll have to come back to that. Use this one. Right. So low hanging fruit objective, short and crude. Come and take and fall into 20 to 30% of this range. Quite easily, comfortably fulfills that. Let's have a quick look. QI. But you get the premise, right? So the same idea of it being TGI Fridays, right? So if we just jump back onto this, we can go onto the daily. Just take this weekly candle, low to the high. Okay, so on Friday, we're looking for price to return back into 20 to 30% of that range. Well, this was the Friday high. This is the monthly order block. Returned to 20% to the tick. Expanded higher. This is what ICT was mentioning as time distortion before price ran back down into the 20 to 30% range, right? Using the weekly range, right? And this is on the premise that we're using a week that is extended, where we've just had day after day of green days. Green, 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 green. Last day runs into a higher time frame PD around a Friday, returns back into 20 to 30% of this range, right? the exact same premise applies because time is fractal. So if you really want to take low-hanging fruit, running price into a higher time frame PDRA during the Asia session, sorry, the New York session, New York AM session, for short into that range. Quick look at this. Be interested to see how price respects when if it gets into that mitigation block. We're keeping an eye on that. Set a quick alarm. So we've got an H1 rejection block here. Let's just mark out this wick. So 72.12. Sorry guys, just prepping something at the minute, just kind of gone off piece a little bit. Oh no you don't. Oh no you don't. Tiny little volume imbalance just above that on the 5. I do want higher prices on crude. It's just I'd like to see price come back once more before it eventually goes. So yeah, just going back to ES. So this is the extension on the weekly's range, right? So you're taking the weekly, you're looking at Friday, the high to low of the week. You're waiting for price on Friday to hit a higher time frame P array, and then in the PM session, you're looking for it to run down between 20 and 30%, right? And you can see how on Friday we consolidated in that region. ES doing a whole sweet nothing. It's a high risk short here, by the way. It's a high risk short. I'm expecting price to drive higher on crude. So if you are taking short, it's contrarian to the directional bias in my view. I want to see it get up into the upper quad of this bearish order block on the daily. All right. But that's not to say you can't capitalize on a very nice move going contrarian to the overall direction of where price is leading to. This is an H1 rejection block inside of a premium on a higher time frame, right? We're inside of a higher time frame premium inside this range. We have on the lower time frame, we have this mitigation block on the 1 minute. So now complete close of this SIBI on the 15. And we just got an open volume imbalance just above it on the 5. But apart from that, you know, it's a low risk entry in the sense that, you know, your stop's just on the other side, right? So, but it's not highly probable with it being contrarian to the overall direction in my view. But this is this happens to be a MIP block that is also BPR. These two candles are exact same height. This is BPR. So when there isn't money on the floor with ES, then I look to other commodities or other indices to trade, right? There's no point, you don't have to trade ES every single session, every single day, right? Just wait for your opportunities. Eventually, well, you know, you got your 5 handles off ES out of the rejection block on the 15-minute. Those from Red Pill will be surprised I didn't take it because, as you know, I love a 15-minute volume imbalance, especially as it's at 62%. But, you know, I was not feeling it. Just wasn't feeling it. One of those days. One of those days. Plus, I'd just taken a long here, so I wasn't really framing or looking for an entry short, sorry, an entry long, as I'd already taken a trade. And I like to let my mind breathe before I analyze a new trade, right? Otherwise you get brain fatigue and you don't give yourself time to rest, right? You should always give yourself time to breathe in between trades, right? It's the best, honestly, it's the best frigging antidote to over trading. Is just have like a very simple rule. Like if you take a trade, you have to have at least a 15-minute break. Like not necessarily from reading the charts, but a 15-minute break from pressing a button, right? And it will prevent you from over trading. Like how many times, you know, as a neophyte trader, do you take a trade and you're red and you're like, fuck it, I'm going to get back in. Oh, God damn it, you know, I'm going to make sure I get this right. You know, this is definitely going to be right. I'm going to get back in right here. Like, all of that is just like stuff you do when you're a novice, right? You grow out of it. And the quicker you can do that, the better. And so one way of doing that is to take that opportunity away from yourself, right? Just take the opportunity away from yourself, right? If you're giving yourself the opportunity to overtrade, then you're going to overtrade. It's like if you go to a crack addict and you say, oh, and you just like, you say, okay, sit on the sofa, bro. I'm going to turn on Netflix. And by the way, I'm just going to leave a little tin foil packet on your side that is full of crack cocaine. Do you reckon if you went to the shops and come back, that guy isn't going to be fucking knees deep in that shit going, you know? Of course he is. Right? The opportunity is there. The opportunity is in front of him to consume those drugs, right? In an environment where he's likely to consume those drugs in front of a chart, right? So he's in, well, not a chart, in front of a TV screen, right? The dude is in front of a TV screen with cocaine in a little tinfoil right next to him on the sofa. The guy's going to shoot up. It's a no-brainer, okay? So as a trader, you're not really any different as a neophyte. Right? You're susceptible to addiction. You're susceptible for being manipulated by the markets, right? The market maker you can see as the nasty drug dealer, the guy who's just trying to feed you bollocks so that you take it and you feed yourself that dopamine hit, right? Right? This is like a really sort of loose metaphor, but the principles are so true. Right? The markets are designed to lure you in so that you feel that you can make as much money as you can, when in reality, all they're doing is just consuming your money. Right? It takes time and scars, mental scars, to build the fortitude to know when not to trade. And you only trade with the market makers. Right? So one thing I do, and because when I first started trading, I was susceptible for over trading. You know, I talked about this previously, that there's two types of traders. There's one trader who can't get into the market for fear of just losing, right? So they never press buy. Those people are very, very good at managing risk, but they often choke their trades, or they struggle to get in and they struggle to execute. The other type of trader, which is what I was, which is actually far worse as a trader when you start out, is the person who just overtrades and wants to imply their will onto the marketplace, and that needs beating out of you. And the only way you can do that is to take the opportunity away from yourself, right? So if you find that you struggle with overtrading, the best thing that you can do is take the opportunity away, and you do that by giving yourself breaks in between trades, right? So if you take a trade, whatever it be, whether it's a winning trade, whether it's a losing trade, whatever it is, for 15 minutes you get up from your screens and you go away. Right? You're doing two things. You're taking away the opportunities. You're taking away the drug, which is essentially this, right? Your mouse button. And you're taking away the environment. The environment is just staring in front of these 7 or 8 screens, or however many screens you guys have got. Right? If you're just sat in front, like, of all that screen, all that information, it's like a tunnel vision. You just get stuck in it. That's your environment, right? You're like, you don't know what anything else, you don't know anything else around you apart from those screens in front of you, right? And then if you've got this little crack addict's mouse pad, which is essentially your needle, right? You're asking for trouble. You're asking for trouble, right? So if you were to go back to the analogy of a drug dealer or a drug addict, if you were to tell a drug addict, look, how would you get over your drug addiction? Well, you would say change your environment and change the things that are around you that are providing you the opportunity to do it, right? So, treat yourself like that drug addict. You need to get away from the environment you're in. So get up, go walk your dog, Go walk and go grab a coffee from the high street. Do something. Go and buy something. It doesn't have to be anything extravagant. Go and buy some. Go to a store and buy something for your desk. Whatever it is, just give yourself a break. Go and read a book. Go and sit in another room. Right? And I guarantee it, when you come back to the charts, you'll be a different human, right? You're fresh. You're looking at the charts with a clean slate. You've completely forgotten about that previous trade. You have no emotion again, and you're back to your level playing field where you can reanalyze and you can set up the next trading condition, right? So there's so many times as a trader where you overtrade, and there is no real set time of when you finally get it, because everyone's different, and everyone, most people are stubborn. I'm stubborn. Most people are stubborn, and they have to learn through their own mistakes, because it's the only way you can learn. But the sooner you realize that, and the sooner you go, okay, right, enough is enough. I've got to work on this. I've got to stop over trading, or I'm never going to make it. Then as soon as you get that realization, every trader goes through it, but it's amazing when they do, and they go, wow, okay, now I get it. Now I get trading. Trading is not continuously tapping this. That is not trading. It's not trading. That is gambling, button bashing. Trading is analyzing price, analyzing the markets, and then finding a high probable, low risk entry that is back tested and replicating it consistently, rinse and repeat. That is trading. Not, I see this fluctuation, I see that fluctuation, I see this, I see that, I see this, I see this. That's not trading. And if that's you're not trading. I'm sorry, but you're not. You're just gambling, right? And I guarantee it, because I've been there and I've been through that process, that you'll have periods where you are, take a banging trade, right? And you're like, sheesh, I can do this, right? You'll slap out a 10, 15 handle trade, and it would be executed properly. You've planned it out. You've got in at the right time and price. You knew where the draw on liquidity was. You're like, why can't it always be like that? The answer is it can. Right? The real thing is that it's you. You are the issue. You are the issue. You. Right? It's not the chart. I'm a trader, you're a trader. I'm profitable, you're not profitable. You can take a good trade, I can take a good trade. What's the difference? We're both looking at the same screens. Right? We're both looking at the same goddamn screens. So what's the difference? Difference is the person clicking the mouse. Right? And one of the major differences between a profitable trader and a professional trader and a neophyte newbie trader is the amount of times that they press this button. The amount of times they press this button. Right? The amount of times they press this button. That is the difference. Right? I can go a whole session without trading if I don't want to. But if you're sitting down at your charts and you're like immediately drooling at the mouth to take a trade, and like, okay, in this session I've got to take a trade. I must take a trade now. I've got to take a trade. Where's the opportunity? Oh my God. Okay, I see this. I see that. I'm going to take this. I'm going to take that. Okay. Wow. Wow. You got a long way to go. You've got a long way to go. Right? And not necessarily in your understanding of ICT concepts or price delivery or anything, but in your own mental, in the way that you approach the markets. A lot of people overlook that. They think, oh, okay, I'll go and study ICT for 6 months and I'll be rich. Well, fuck that, right? You need to study ICT for 12 months and then you need to work on yourself for at least a year. And I could go into depth about how you do that. I could go on and on and on and on and on about how you do that. But it's not just a case, trust me. Trust me. If you think it's just a case of learning ICT and you're going to understand trading and you'll be profitable, you're deluded. Right? You have to be disciplined in all areas of your life. You have to be incredibly focused. You have to be mindful. You have to be acutely aware of your surroundings. You have to be mindfulness is the biggest one, right? Being mindful of where you sit, right? If you're just so focused and dialed in on something, and you don't have the ability to and have the self-awareness, you'll just be tunnel visioned, and you need to get a control of your emotions. And the one way you get in control of your emotions is to develop mindfulness. About the inner work. Do you mean about personal stuff? About personal mindset and stuff? Jeffrey. What do you mean about sort of my approach to ICT and my models and all that sort of stuff? Jeff, the fact that you know about Red Pill University, I assume that you are Red Pill. Not at this moment. It is something that I am looking to do. My process at the moment is that I'm developing out a whole course of the ICT material and my approach to ICT and my models and everything, how I trade and how I'm a successful trader, and giving everyone an understanding of how I trade. And a lot of people inside Red Pill, I think, find that valuable. And then beyond that, I'll definitely be looking to extend sort of mindset and all that sort of stuff. So you guys have already got a touch on that. You guys have got my Spotify playlist, which is motivational based, which I suggest you play every single time you're at the gym, whenever you're driving the car, whenever you're doing your shopping. Like, all of that stuff ingrains a certain way. Oh, sick, brother free, cool. All of that stuff ingrains in your mind over time. Like, you have to surround yourself with the right fuel, right? The right stuff that you're putting inside of you at all times. And so I still do it today. Like, every single day I meditate in the morning, and I stretch and I meditate every day in the morning. Okay, and then when I always go to the gym before I sit down on the charts, or I go for a run around the block, right? Every time I have a spare minute, when I'm driving, I'm listening to that motivational podcast. Whenever my Spotify playlist. Whenever I'm at the gym, I'm listening to that. I don't listen to music when I'm in the car. I don't listen to music when I'm in the gym. I don't listen to music when I'm doing my grocery shopping. I'm listening to that stuff. That is continuously going on in the background. Like, that is like the first fundamental step. Continuously putting that positive mindset into your brain at all times. And of course, I'll go through this over the course of moving forward, and that will all be developed out about mindset and that sort of stuff. But first and foremost, that is it. But I've got whole strategies at the way that you can improve your diary, how you improve your discipline, how you can improve mindfulness, meditation, different forms of stretching, all of this stuff, diet. All of this is what creates a trader, right? How many traders do you know who are lazy, who are rocking up to their charts at 9:45, that are not looking after themselves, that are eating horrendously, that are not working excessively hard or harder than the next person? I don't know one. That every successful professional trader is cut from the same cloth. They all speak the same, they all look the same, they all act the same, and there's a reason for it, right? It's not an office job. You can't be a 30-stone Terry and just have a half-assed attitude and expect to make it in trading. You can't do it. It's an elite sport, trading. It's an elite sport, both mentally and physically. It is draining, right? And it takes a certain level of attrition to get through that. And you can't just be an average Joe and expect to be good at trading just because you go and watch a couple of ICT series. It's mind-blowing that the people I see who put so much money into trading, when they have absolutely no idea what it takes to become a successful trader. It's not just reading price action, right? What happens when the trade goes against you and you don't understand how to manage that trade? That sentence alone is because you're inexperienced, and that comes with time. And so I always say you need at least 3,000 hours chart time. And then you need experience of trading. So that comes first. And then beyond that, it's having the understanding to manage your emotions. Like, if you don't even know how to manage your emotions and be mindful and be aware of staying calm, staying cool, understanding your levels, understanding if it's going against you, so you can act in a level where you're balanced, you've got no hope. No hope. I see so many neophyte traders who enter trades and they're just a fucking nervous wreck. And that's because they have no control of their emotional state. They have no control of themselves as a person, and they're just applying themselves onto the markets, and they're hoping that it works on the very little knowledge that they have in relation to ICT or any form of trading in that matter or style of trading. But because we have this, this lure, right? This lure on social media and just the general global world that we live in today, that everything has to be now, and everyone's posting their bullshit fake lifestyles on Twitter and trying to get some Twitter clout, when in reality they still live at home with their mum, right? I could name you 4 traders on Twitter, right, who have 50,000 followers who still live at home with their mum, right? I'm not going to name names, but I could tell you who they are. It's embarrassing, right? It's embarrassing, right? But people will follow that stuff because it's perceived success. That's the society we live in, right? So everyone wants everything now, but the reality with trading, it is the complete opposite of that. It's the complete opposite of that. You don't believe me? I don't care. I genuinely couldn't care less if you believe me or not. I genuinely couldn't care less, honestly. I don't need to be on Twitter. I don't need to be on YouTube. The only reason why I do this is because I want to give back, and also I want to create a trading floor in Miami. I've been absolutely clear with that, and I'm looking for a certain set of traders, a group core that will form that. With the relationships that I have with pension funds, I can create a trading floor in Miami. That is my goal. That is why I'm doing this. I don't care about Twitter clout. I don't care about anything other than creating a core that is relentlessly pursuing excellence in trading. That is it. That's my driver. Right? But it takes time. It takes so much time, both mentally and experience-wise, to get to that level, that you can't get frustrated when you've only just started learning trading, right? So many people fail before they've even given themselves an opportunity to succeed. It's mind-blowing. It's mind-blowing, right? It's mind-blowing. You have to give yourself an opportunity to succeed, and you do that by backtesting, by going into the demo, into the paper trading, and working out a strategy that you understand inside and out, right? Whilst in the same time reading on mindset, practicing meditation, sticking to a strict daily routine. You think that stuff is not necessary? Like, it's as important as the trading. Like, the trading is as important as the mental side, the physical side, the diet side. It's a whole entire package. It is an elite sport. You can't have one without the other, right? You can't have one without the other. But you have to allow yourself to build yourself as that athlete, right? You can't just expect to, you name any athlete. You can't expect them, right? You might be as good as Michael Jordan at playing basketball. You could. Who knows? I don't know. You might have been a really good hoop shooter when you were a kid at school. Right? But you never applied it to the point where you could excel. Right? You didn't go to the degree that Michael Jordan did in order to get to his level. That is what it takes. But it's not just Michael Jordan shooting hoops. Everyone sees that. They see the Nike advert. They see the slam dunk. But they don't see everything else. Right? That's the society we live in. We see the Michael Jordan doing the slam dunk, GOAT. Oh, Jordan, GOAT. Jordan, GOAT. That guy's a freak. How's he done that? Right? He's so naturally gifted. He's so lucky. Right? Fuck no. Right? There's stories of Michael I don't think it was Michael Jordan. Who was it? It was the other one. Can't remember. What's his bloody name? Kobe Bryant. So Kobe Bryant would stay, I think it was the Staples Center, would stay in the Staples Center 3 hours after a game, even after they won. And they would have to keep the arena open just for him. Right? And they would turn around and they, you know, he did an interview once and they said, yo, Kobe, like, why'd you do an hour, 2 hours after every match when everyone else has gone home? Right? And he's like, well, after an hour, 1 hour means nothing. Right? 1 hour a day means nothing. But 1 hour a week is 7 hours. Over a month, 28. Right? 400 hours over a year. Over a career, it's over 2,000-3,000 more hours than you. Right? There's the difference. So not only is it hard work, going the extra mile, but you really think he's eating shit? You really think that he's not looking after himself? You really think that he's not working on his mindset to be able to do those things? Like if you want to become rich, right? Rich, not just I want to be rich. If you want to become rich, right? You have to break through the BS that is, I will just be able to do it at this level, at who I am right now. Right? If you're just coasting through life in like gear 3, gear 4, you may get there. You may get there when you're 50, when you're 60, by hook up, just by the sheer length of time it's taken you and you've stuck at it. But if you want to become rich and somebody different, it takes an excessive level of dedication in all areas of your life to improve. Okay? And that's where I see the difference between people who fail at trading and those who make it. Some people are just born to be traders. Some people aren't. And the difference is you as a trader, and it's what you have in between your ears. That is the only difference. There is no difference between me or you. I am an average guy. I've made money in real estate. True, fair, who cares, right? But I am still a trader, right? Profitable trader. Okay? But I'm not a brain scientist. I'm not someone who is, academically proficient at anything major. Yes, I was half decent at English. Yes, I could, business, I got A's. But it doesn't necessarily mean that I am different to you. The only difference is how I apply, right? But not just trading, but myself as a human being, my mindset, and everything else that goes into being a trader. That's the difference, right? That's the difference. And those people who fail or give up or don't make it as traders are the ones who have just overlooked that part. They've overlooked the amount of dedication and what it takes to become a trader, right? And they just fall foul and they realize that it's not them. And they are not that, right? They like the idea of becoming rich. They like the idea of having the freedom, but they don't have the capability to do it. It's not them as a person. So there comes a point as a trader where you get stuck with a really serious question, right? And it usually happens once you've blown a load of money or you've blown a load of accounts, that you go, okay, this obviously isn't working. So I've either got to change or I stop. That is it, right? But if you keep going down that route of failing, only an idiot makes the same mistake twice. And if you keep going down that route and not changing, well, that's just lunacy. That's just lunacy. You need to see someone, right? You need to get some help. But if you want to become a trader and you have hit that wall where it's like, I need to change or this isn't going to work, then you need to change, right? You need to change. It's not the charts. It's you as a person, right? And that takes a conscious effort, and it's not easy. Most people are happy just being comfortable. Most people are just happy being comfortable. The disease of average. I talk about it a lot in Red Pill. It's the disease of average. Right? I see it everywhere. You only have to walk down a busy high street to see average everywhere. Right? You can have that as your life if you want. There's nothing wrong with it. I'm not saying it's a bad thing. It just doesn't work as a trader. It doesn't work. It's as simple as that. But if you want to become successful trader, then you know what you have to do. But it's, it takes application and time and patience with yourself, right? So if you can combine a few things, which is, okay, well, I've flipped the switch. I'm going to be a completely different person now, right? To become the person you want to be, you have to leave the person you are, right? It's one of the truest sayings I've ever learned, right? To become the person you want to be, you have to move away from the person you currently are. Right? So if you can work on that 1% better every day, and you make a conscious effort to do that, whether that's exercise, diet, mindfulness, how you look after yourself, studying, applications, sleep time patterns, discipline, how you speak to other people, gratefulness, all these things. Right? All of these things. Then by the sheer power of compounded interest, you will get there. You will get there. I guarantee it. I guarantee it. Right? Guarantee it. Right? Honestly, I'm not making that up. Like, anyone can do this. Anyone can trade. I'm not mean. I genuinely mean that. Anyone can trade, as long as they are willing to change who they are as a person. Right? And become a trader. You need to become a trader. You are not just a trader because you click this thing. That is not a trader, right? That is someone who likes the idea of becoming rich through trading. A trader is a whole lot more than that, right? So guys, that's going to wrap up my little rant. And that sort of went off on a little tangent there, so I apologise if I bored you to death, but I think it's important. It's very, very important. It really is. Right. Where are we now? So if anyone got short off that MIP block, you would have had a nice $300-400, something like that. Did anyone get off the MIP block on crude? Anyone on YouTube? watching ES. Let's have a look. So this is a classic example of just when you stay patient. And this is it, right? Stay patient. So, was there a nice opportunity in hindsight off this order block? Sure. Could I have taken this as an entry? Sure. Everyone knows how I trade 15-minute rejection blocks. I had this line marked out. I was looking at a higher time frame where the body was respecting this 15-minute rejection block. Sure. Do I have to take it? No. Right? I don't. Talk about this a lot inside Bread Pill. It's like what the highest form and the highest ability and level as a trader is when you can see a trade set up and not execute on it, i.e. not take it, because it's not high probable enough for you. Like you can take, I can see trades left. We can take 5-handle trades all day. We've done it, right? Literally every price swing, we've done it. If you don't believe me, ask some people. We've done it. Can do it. Should you do? Would you? You know? Do you need to do that? No. No. I took this trade long. Here. Do I need to then go and hunt immediately for a trade straight away? No. If I'd got to my the screens at this point, may I have taken this trade? More than likely. Right? But the very fact that I had taken a trade, I didn't need to jump back into another when I know that I'm going to be in that trade for a long period of time. So I like to give my brain space to breathe. Okay? This is an opportunity that I could have taken and planned out, but didn't take. You've heard it here. I saw this trade. I called this trade. This area. Right? Didn't trade it. Right? Most neophyte traders will be kicking themselves. Right? God fucking. Right? I say this, which is quite funny, because last week for FOMC, I missed this. I missed this entry on FOMC by 2 ticks. I was 2 ticks from being filled on this entry. And I'll be honest with you, I got a little frustrated. I felt my temperature rise a little, right? I am still fundamentally a human being. But I'm mindful enough to know what my emotions are doing when they play against me, right? The devil will show up at every level in your life. The devil will show up. Emotion in trading is the devil, right? So every time you see emotion crop up, you need to be mindful enough to know and go, hang on. Devil's knocking on the door. I need to go and address that. I need to go and deal with that before I come back to trading. So what I did is I went away, right? I went away for half an hour, told the whole community I was coming back later. I missed this entire range. Lots of people inside Red Pill took this. Really nice entry of this fair value gap after break of market structure, 2022 essentially. Was I angry that I missed this? At the time, yes. Fuming, actually. I was really angry because it was FOMC and it was 40 handles in literally 2 minutes. It got to me. But I had the mindfulness to step away from the charts. I came back here and I traded this entire range. I took that entire range. Right? But as a neophyte trader, this would have infuriated you to a point where you would have, say, got in here, chasing price. And then price would have run back on you, stopped you out, before ultimately running in your direction. And then what happens? Well, I know, because we've all been there. you become even more frustrated. Because you're like, God damn it! I knew where price was going. Right? And then it's come and stopped me out. And then it's got to run with me. And I missed my entry. Yeah, right. You know, that's when you have broken monitors. Right? That's when you smash keyboards. Okay? So that's the difference between a professional trader and a neophyte trader. A professional trader understands their emotions. And they can sit there and go, okay, I feel the devil knocking at my door. I know what the devil does when it comes into my trading, and it absolutely annihilates my profitability. So why on earth am I going to open the door to that dude? I am going to go and step away from the environment. I'm going to remove myself from the situation so I can't cause any damage. And I'm going to go and have a chat with the devil, right? So I'll go lie down in my study. This is my trading den, by the way, but I have another reading room. Just go and sit in my reading room and just sit, meditate, be grateful for what I have, right? Sit in silence, just listen to sound, maybe read a few pages of a book for half an hour, come back to the chart, gone. Absolutely no emotion whatsoever. And back to being level-headed. Okay? Whereas when I am meditating in my reading room, right, being grateful for all the God's blessings that I've been fortunately bestowed upon me, that through hard work and determination, I might add, neophyte traders are engaging in this, and they're only making themselves more angry and more frustrated. Okay, so the difference between a professional trader is the time spent here, right? I have gone and left. I'm in my study room, chilling out, chatting to the devil, right? Getting him under control. Whereas the neophyte trader has just gone AWOL and has opened the door to the devil, and the devil's just fucking taking a baseball bat to the inside of his house, right? Just running around, smashing shit left, right, and center. Bang, 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 bang. Right? And by the time we are both back here, we're down here, who's now chill? This dude is borderline psychopathic, where this trader is back to who they were back here. They have closed the door on the devil, right? So if you ever catch yourself trading, or if you ever see yourself opening the door to the devil, which is essentially when your emotions become heightened, you have to go and close the door, right? You have to go and close the door. Okay, you just have to do it. If you can't do it, the devil has a grip on you, right? And you need to work on that. And you work on that through mindfulness, you work on that through meditation, right? Being able to breathe, all that sort of stuff. You might think it's cuckoo, but you ask any professional trader whether they meditate or not. I guarantee you 95% of them do. And there's a reason for it. Because it allows you to sidestep this. Right? Okay? That is what mindfulness does. That is what meditation does. That is what gratitude does. That is what daily discipline does. That is what looking after yourself does, day in, day out. That. And that might seem insignificant to you, but that is the difference between being this dude who's opened up the door to the devil and getting stopped out and getting chopped up, even though their directional bias was right, versus the trader who is coming back and is reanalyzing the market and looking for another setup once the devil has been shunned. That is the difference between a professional trader and a neophyte trader. Trust me. I've been this dude. I have been this dude. And then guess what? When you come back and you then have spent 5-10 minutes setting up your next trade idea, and then you absolutely slam this trade, nice. All of this has now been rewarded. Now, what is this time frame? What is this time scale between that and that? An hour and 20 minutes, right? So this is the difference between this guy probably going into drawdown, let's be honest. This person's just going to drawdown, whereas this person has probably made $500-600, right? This person has lost $500-600. This person has made $500-600. In what time period? An hour and 20 minutes. All of this stuff is the difference between being a professional trader and a non-profitable trader. But the time frame is minimal. In the grand scheme of things, it's minimal. This is an hour and 20 minutes. Right? It's a tenth of an average working day. Right? So don't be stressed out if you miss opportunities. Right? Don't be stressed out if you miss an opportunity, or you miss a trade idea, or you miss a trade setup that you'd already planned out. Don't stress out, because this is how long it takes, not on average, but it's an example of how long it takes before another opportunity arises, right? Another opportunity is going to arise consistently, continuously, every day, until you, every day, every year, all the way until you're dead and beyond when you're dead. There's going to be opportunities that present themselves that you can trade. So why on earth get frustrated if you miss a trade? Ask yourself that question. Why on earth did you get frustrated? It doesn't make, well, it does make sense because it's a weak mindset, right? It's a weak mindset. That's the reason why. But if you can take a step back and analyze it, well, it all makes sense. So how would you improve on that? So how would you start building on this? This is the other side of trading, right? This is not YouTube ICT videos, right? This is not watching some douchebag on Twitter post a screenshot about a silver bullet that they didn't take, that they took on sim, that has 300 likes. That is not it. This is the other side of the trader, right? The mental discipline, the mental fortitude, everything else that comes into being a trader, right? And it's so massively overlooked as a neophyte trader, because a neophyte trader just wants to make money and become profitable. When the reality is, to become profitable, you need to be able to do this to become profitable. So it's a weird dichotomy, right? It's a weird dichotomy. In order to become profitable, you actually need to slow down, not speed up. You need to slow down. You need to go the opposite. Everything needs to be calm. Everything needs to be thought through carefully, right? Not rushed, not hesitant, not I need the next jab and I'm happy. You're gonna die young if you do that. Right? You're gonna die young because you're gonna just be exhausted, drained, burn the candle at both wicks, right? You're gonna burn out from trading. You're gonna blow accounts. You're gonna get frustrated. You're gonna end up leaving, and you're gonna end up stopping before you even realize you were half decent at trading. Right? That's the reality. That's the reality. All right. So, just going back to this trade. Am I angry that I missed this trade? No, I am not angry that I missed this trade, even though this is a trade that I had in the back of my mind as a potential trade opportunity. Did I trade it? No, but there was reasons for it. I took this trade here, so I didn't need to force this trade. But let's go back through it. Let's have a look. Right. So why was this an opportunity? Well, we had this breaker block, this H1 breaker block on the hourly, right? So we have this low, high, lower, low, comes down, breaks through. This highest up close candle becomes a breaker block on the hourly chart, right? So on the H1, we know that we have a breaker. Okay, cool. That on itself isn't enough, right? But we can combine it with the fact that we're inside of an OTE, right? So we have the high, the low, right? And anything 15 up, body to body, right? So 62%. So 62%, which we know is an optimal trade entry, below fair value. So below equilibrium of this range. Okay, so this is providing market makers the opportunity to acquire what? Longs, right? Well, ask yourself this. If you were wanting to enter the marketplace, would you not want to be entering in with the market makers? Well, I assume the answer is yes. So my simple rules are I only long in discounts and short in premiums. Well, this is technically, well, it is not even technically, it is in a discount. 62% of this leg as a retracement is an opportunity to go long. Cool, right? So not only do we have an H1 order block, not only do we have 62%, but we can have a look on the 15, which is a bellwether, what we had. Well, we had this rejection block. Rejection block on the 15, CE is a key level. Look how the candles were wicking through, but the bodies were respecting to drive price higher up into these inefficiencies up here. Questionable whether it punches through that. I've just completely moved to the sidelines. But that would have been your trade, right? You'd be taking partials at CE, or you'd definitely be looking to take partials inside of, you'd be looking on a lower time frame essentially, but you'd be looking to take partials inside of this SIBI on the 15, so you could drop down. You have this little volume balance. This would be a sensible spot where you'd want to take partials, right, inside this volume balance. Okay, so that would be, if I was long, this is where I'd be looking to take my first partial. Then if price was looking to drive higher, ultimately I believe price is going to want to get back up to the new weekly opening gap, that area today, because price consolidation. So I'm looking for price to pull back up towards this new weekly opening gap. But you'd be looking to hold runners, right? But you've now gone from top down, higher time frame down to lower time frame. Picking, finding an entry, right? Higher time frame down to lower time frame. You've now found yourself an entry. Am I angry I didn't take it? No. 33 to 39. It's like 6 handles. It's baby money. Baby money. But look, we also had C of this wick, further confluence, right? The low C of this wick. And it was also the daily SIBI high. Right? The very low of this candle is this SIBI high. So you had a multitude of confluences for that. That's why you could take that as a long. All right? Back in a sec, guys. Just going to get myself something to eat, and then I'll be back. If you found, if you're finding this valuable, smash it. Give me a thumbs up in the chat. Let me know if you're even listening, or am I just talking to myself? And whilst you do that, I'm just going to go grab myself something to eat, and then I'll be back. I'm back. I'm back. I'm back. I'm back. I'm back. I'm back. Right, so if you missed my little session this morning on let me see. Yeah, it's. I'm guessing it's because it's this screen layout, Yaz, right? So we've got this 15-minute Sibby. See how price respects it. Inside 5-minute BPR. So as I mentioned earlier, taking partials inside of this volume imbalance, inside of this 15-minute. Pardon me, need a burp. Sibby. Appreciate that, Eric. Appreciate that, brother. It's important stuff, broski. I will. I'll probably cut that out and post it on YouTube as a separate video. So for those of you who missed it this morning, who are just waking up and stumbling to the charts, I did a big explanation on sort of mindset and what it takes to become a trader today on YouTube Live. So I will post it later. But this is a classic example, right, of just moving price from a discount to a premium to a discount, right? So being long of this, pardon me, apologies. Being long of this 15-minute rejection block, taking partials inside this 5-minute BPR, inside of this OTE, inside of this displacement leg, which hasn't been rebalanced, right? After price had ran down on a higher time frame into a discount, right? So this is moving price from a discount to a premium. So if you're just like not even looking for huge ranges, this would set up the trade, right? So from 33 to 41, there's 8 handles, right? It's not a sharp stick in the eye, is it? 7 handles is certainly not a sharp stick in the eye. So yes. Is that Gauxin? Is that the Discord stream? Do you want to come and join YouTube? I'm gonna stream on YouTube until midday, and then I'll jump back into Red Pill. I'm currently streaming across both, but pardon me. Right, so where was I? Lost my train of thought. Moving price from a discount on this higher time frame to a premium, right? Short-term premium. So yes, if you're not even looking to capitalize on, the entire daily range, this would be an opportunity to take a trade. Yeah, as you missed my trade, you missed the rant, brother. You missed the AM rant. did a well, what is it? It's like a nighttime rant for most of you guys in the States. But I'll cut it up and I'll put it inside Red Pill, or on YouTube, just on that section. So yeah. This is a classic example. Moving price from a, I'll get this sentence out in a bit. From moving price from a premium to a discount, right? From this 15-minute rejection block into this displacement leg, which hasn't been rebalanced yet. So, what would you be looking to do? Well, guys, gals, girls and gals. Price is moving for buy side or sell side liquidity, or inefficiencies and imbalances in price. Right? That's trading in a nutshell. So once price has come down, swept this sell side, ran down into the 15-minute rejection block, CE, and for those who are Red Pill will know how I trade rejection blocks. Looking for price to come and rebalance the inefficiencies in price. Well, and imbalances, I will add. And so where do we have imbalances? Well, I always like to look at the bellwether chart. And we have one right here. Why am I specifically picking this one? Low-hanging fruit objective, where 62% is inside of that SIBI, right? Also, we have this balanced price range. Good stuff he has, right? So I always like to layer confluences. Like, if we just rewind just a little bit, just on the, because a lot of people get confused about directional bias. And guys, if you don't know how to do directional bias, draws and liquidity, I did an episode on YouTube. Now, if you go through my videos, I think it was like 2 ago, it was like forming directional bias and draws and liquidity on lower time frame. It's a really good video. I highly suggest you watch it. But like for me, you have to have stacked confluences. And where most people get confused and they get caught up is like, they're like, okay, well, price is in a discount, I'm just going to go long, right? Well, in a neophyte's perspective, yeah, sure. Like, okay, well, we're in a discount. Technically, I can go long, right? But what you need to have is stacked confluences in that area for why you would want to go long, right? You can't just have the premise that you're at 62% for a reason why you'd go long. That alone is not enough, Like, you have to have layered understanding and layered confluences as to why you would go long at that level. Well, what do we have as the reason why we could have taken a long? Well, there are many. Well, firstly, we had that 62%. Secondly, we have this H1 breaker block, right? Low, high, lower, low, breaking through. This is now breaker block. Okay, what did it also run down into? Well, we know that wicks are gaps. CE is a very, very strong part of a wick. So CE of this wick ties into the low of this candle. What else do we have there? Well, if we go across the daily, we have this old SIBI high, right? So at this level, we're now starting to stack and layer confluences as to why price would respect that level at a discount to move back up into a premium, right? BISI low. If I say BISI low once more, can someone slap me? God damn it. SIBI high. Yeah, sure. 1 second, yes. So that's the link to the directional bias video. Okay, so now we have stack confluences. The BISI. Oh! Ah! Can you see the devil's knocking at my door? So the daily SIBI high CE of this week. Also on the 15-minute, we had the rejection block. Now, guys, we are starting to build an understanding why price would respect this level. Yes, yes, yes. What have we also done? We've swept previous day's low. We've swept Asia low. We've taken this sell side liquidity. Are we not anticipating price to at least, even if it was to move lower, return into a short-term discount? So even if you don't understand fully directional bias and draws and liquidity, this would have given you the premise to go long. Where would you have been targeting? Where would you have been targeting? Well, by the way, if anyone took that mitigation short, how about that for a slapper of a trade? Bosh. Anyone else took that mitt? Anyone else took that mitt? That was a beastie trade that we were talking about earlier. But let's go back to the ES. So now we're looking at price targets. We're looking, if we're taking more than one contract, where we can start taking partials and start paying ourselves, right? Now, we're going through the PDRA matrix. We want to be aware of mitigation blocks, breaker blocks, liquidity voids, fair value gaps, order blocks, rejection blocks, old high. That's the route in which price will go when it's looking to go and take an old high, right? So, you know, you could have looked at this breaker block as a potential for price, and technically we are respecting this breaker block. We also have this range and this BISI. Oh my god, I always get those fucking the wrong way around. SIBI on the 15, that needs to be rebalanced. And we also have this 5-minute BPR. If we also drop down to 5-minute, we also have this imbalance, where we actually, this is actually technically a liquidity void, where there is the price hasn't been printed in that area. Well, it has on the this. It's liquidity void technically is when you don't even have a candle, a wick there. There's literally just a complete gap. That's a liquidity void. This is an inefficiency in price, but potatoes, use semantics. But what I'm looking at now is how price wants to respect this 5-minute BPR inside of this 15-minute SIBI at OTE or inside of the optimal trade entry to see if price wants to hold or move lower. Now, if I was in this trade, I would simply just be holding runners, right? But this is where I'd be looking to frame partials, right? And as I mentioned, a place where I've taken my first partial is inside that 5-minute volume imbalance, okay? Which is inside that 15-minute SIBI. Ultimately, I'll be looking to see and hold for price to come and move back up towards the new weekly opening gap, right? So I'll be looking at this range. This is just eyeballed, but for price to get back up into this OTE range, right? That's what I would be looking if I was still holding trades, and I'd just be letting one lamb go to the slaughter, right? What I mean by that is if I still had a contract, I would still be holding it at break even. Now, this is difficult if you're just trying to pass evaluations. I get this, but ultimately it's what you want to achieve for as a trader. You know, you want to have our contract go to slaughter, which is essentially you're allowing one to run to a higher time frame terminus, right? So, you know, you're paying partials on the way, and if you have an ultimate objective, you're keeping a position at break even to allow it to run to terminus, right? So if you're wanting a classic example of that, well, we had it here. This is a classic example of why you would want to do that, okay? So let's say on this day, when we actually went short here, this was the monthly order block, we went short up here and drove it down, right? So say you didn't get up here and say you got back in on this retracement. So when price returned back up into this OTE range and you went short on this SIBI that we had here, and I know I talked through this live inside Red Pill, and a lot of people took this trade on Friday. I was in up here, but you know, I talked through people getting in at this position. Now, this would be a classic example of why you'd want to allow one trade go to the slaughter. So let's say, for example, we took 3 contracts here, right? Now, you know, your stop would be there evidently, right? But if you're looking to trade price down, right, you would have looked for opportunities to take a position off, right? So, you know, just very, you know, obviously you'd want to stack more confluences than this, but let's say you took a contract, you took one off here, right? And then at the midnight open price, you had another contract here, right? So now you paid yourself twice. What a lot of neophyte traders will do, and this is the difference between capturing huge ranges and not, is they will trail their stock too tightly. And I'll be honest, I'm guilty of this on occasion, especially when I only have 1 contract or 2 contracts. But if I'm ballsy and it's an A+ setup, I usually take more than 2 contracts. But price, what they'll do is they'll then, you know, trail their third runner here, right? And price ultimately comes and takes them back. However, this is your lamb to slaughter. This is what I mean by lamb to slaughter, right? So this contract has not moved from its ultimate stop loss position, which would have been above this order block, right? So, you know, you've still got a lamb to slaughter. And ultimately, if you had done that and you had your higher time frame objective, which was to come and run the Asia low for the New York AM session reversal, well, guess what? You would have capitalized on that range. So your final contract would have ultimately ended up being taken off down here, right? And that's the difference between, you know, a professional trader capturing range and an intermediate trader who is capturing half ranges. So this is what I mean by lamb to slaughter, right? Now, yeah, this is an example where, you know, I'd be allowing a lamb to slaughter. So I'd still have a contract at BE allowing price to retrace, but ultimately to see if it wants to come punch up and take into and rebalance this overriding leg, right? Let's get back up into the OT of this displacement leg that we have here, right? You know, so you know, if we take this range wider, you know, you could argue that price get back above this new weekly opening gap and go all the way back up to 64. I would question whether we get there today. The reason being is I like the idea of having another down close day, Tuesday low of the week. But you know, price has done crazier things. But I do anticipate us to come and claw back to this new weekly opening gap. Reason being, consolidation. We often consolidate around new weekly opening gaps. So you know, the thought of a big sell-off on a Tuesday to move further away from this new weekly opening gap without even rebalancing this leg, I'm not so sure that's likely. So, you know, with pings at 62% on the hourly, I'll be looking for price to draw up back up into this range for a potential continuation lower. All right, this is an old mitigation block over there. So if we just jump onto, nope, don't do that. Jump onto the RTH. So we have the high, low, lower high. This down close is a mitigation block, and then you can see during ETH how that was respected before the dump. So you know, I'm looking for price to get back up into this range. So that's what I'll be looking for. But ultimately, the entry is here. Right, so now you're just holding runners. You know, you're holding runners. That's all you're doing. Seeing what I'd be interested to see. I'm anticipating price to come and take these highs that we have here, right? That's what I'm looking for. Come and take these highs. Look for price to come and drive and take these highs, okay? But okay, let's have a look at wicks. Okay, let's have a look at wicks because this is important, right? This is important. Have a look at the wicks. Right. So on the weekly chart, I want to be aware of the weekly wick. Okay, I take when I'm looking at weekly wicks, the one which is most respected and I take most value from is the weekly wick, right? You know, for me, it's a very key level, right? So CE of a weekly wick is important, right? So I always have those on my charts if we're trading in that area, right? I don't have every weekly wick on my chart, right? It's just what's relevant at the time. Okay, so let's have a look at why this is important. Okay, so this is using a historic CE of weekly wick. And if we are on the premise that price is algorithmic, then these levels will often be revisited, right? They'll often be retested. And price will often reject or respect them. So this 50%, just remember that, is the weekly wick. On the daily, we have this. What is this? What is this? You can tell me what that is. You can tell me what that is. What type of fair value gap? Correct. So this BISI on the daily, and as we know, working gaps, has quadrants. So the upper quadrant is overlapping the weekly wick consequential encroachment, right? So note that, be familiar with it, right? So this is why I have my chart like this on my daily, right? Now, let's go back to this morning's price action. Where we got this candle. You might think, why there? Why this level specifically? Well, upper quad of this BISI. CE of the weekly wick. Right? When price is looking to run down into a discount. Right? It's pulled up into the upper quad of this BISI, which coincided with 50% of the weekly wick, which took out, and then you can start applying deeper ICT concepts, taking out buy side, inducing people into believing market makers, the market is moving longer. It's essentially a Judas, right? Right? Moving down to where? Where did it move down to? 50% of this wick. At the BISI high. Right? At the BISI high. So you can see how you can reference these levels on the higher time frame and then start applying it on the lower time frame for confluences in that area. Right? What was 50% of this wick? What was the high of this BISI? Well, it was 62% of this range on the hourly chart. It was inside an hourly breaker, inside of a 15-minute rejection block, inside, I can't even remember what do we have on the lower time frame? Did we have a 1 minute order block? Probably did. Usually have a 1 minute order block. There we go. 1 minute order block. Right? So when you're going, okay, well, fucking hell, where do I get my entry? Well, I want to go in this area somewhere. No, like ICT is precision. It's precision entries. Right? It's precision entries. This is how we go top-down analysis to get to these entries, right? Why do you think I'm therefore looking at this area to go long? Why am I looking at this area to go long? It's not by accident, guys. Right? It's not by accident. right? This is precision entry. What did I mention to you guys yesterday inside Bread Pill? What was, who can remember, who's got a good memory? What was the level I said yesterday that I was looking for price to get to go long? I think it might have been you. I think you would know, Yaz, because you questioned why I say it that way. 32.25. Right? 32.25 is literally a tick off. A tick off. Right? There's a reason for it. This is higher time frame, top down analysis. Right? To frame an entry. If this doesn't present itself, guess what? There is no goddamn entry. If you can't frame a bias from top down, there is no entry. This is the difference between going back to the crack addict smashing the mouse every so often to staying patient and waiting for your entries, right? Okay, if you got in down here 32 up to 42, there's your 10 handles, $500, a couple of contracts, $1,000. For most people, you just need to do that once a week to change your life. Why are you trading every fluctuation? Why are you trading every session? Why are you trading every trade? It makes no sense. Right? Makes no sense. Makes no sense whatsoever. So this is where I got in. This was a trade I took this morning. I'm currently just sat patient as we run into 8:30. I don't think we have any news. Let's have a quick look. Tuesday. No. FOMC member Williams speaks at 11:45. Doubt she's got anything interesting to say, but you never know. So currently just sat patient on ES. You know, this, if I was still in the trade, I'd literally just be holding runners. You know where I would have been taking partials. I'd be looking for price to come run these highs. To pull back up into this weekly wick again. And then beyond that, I'll be looking for going back towards the new weekly opening gap. I'll be going to this old balance price range. All right, so that's what I'll be looking for. So that's going to cover ES and the entry. So this was the trade, as I've just explained and gone through with you all. Keep an eye on this level, this balanced price range, and how price respects it. Right, so crude. Jeez Louise, what a trade! What a trade! So for those of you who have been on since this morning, it's over $1,000 trade that. So let's go back to crude. Why did I have this as the area to go short on crude? Well, if we look at this range, prices run up into a deep premium, going back into this order block, going back into this breaker block. So we have a breaker and an order block in the same piece of price action right here. Okay, what do we know about crude? Crude will often like to take highs before breaking, and then it will have a couple of goes at it before it breaks, right? So we took the buy side here, right? And then we had the big meltdown. Price will often, especially with crude, go back and retest those highs. Well, what did we have back up there? And we're anticipating price to move lower. Guys, it's the day of the wicks. What was I talking about? And what did I have drawn on my charts? You guys saw me draw this this morning. You saw me draw these on my charts. 50% of this wick is a rejection block. Okay, because it takes out this previous high, takes out these pools of liquidity. This it forms a rejection block. Okay, 50%. What's above that? This is just purely experience, but if I see this sort of price action, I take this wick as well and take 50% of that, and that's where I allow price run into. You can see how price essentially respected those two to a T. But for that on its own is not enough. It's not enough. So what do you think I'm going to say, guys? Top-down freaking analysis. Well, what did we have on the daily? Well, on the daily, we had 50% of this bearish order block. Well, if we're expecting price to be heavy and bearish, what would we be looking for price to respect? 50% of an order block. Is that not 50% of an order block that this candle wicked through? The answer is yes, right? What else do we have that price often respects? Volume balances. Do we have a daily volume balance that's old here? You can cut through candles, never forget that. This volume balance, right? So we have a volume balance CE of this daily bearish order block, okay? Higher time frame inside of a goddamn premium. What is price doing? Moving from a premium to a discount to a premium, looking for liquidity below and above old highs and old lows, or searching for inefficiencies and imbalances in price. Guys, that is trading. Right? That is trading. So, what do we have? At that level where we could look to frame an entry to go short. That alone is not enough. We now need to go down through top-down analysis. Well, on the hourly, we had this rejection block, wick through these old highs, take the liquidity. Right? Took buy-side liquidity. You can start getting minute, and this is where you can start applying ICT concepts. So, you know, when we took the buy-side liquidity, did we get immediate displacement? Well, yes, sir, we did. Did we get immediate aggressive displacement? Yes, we did. Did we get a return up into an OT? Yes, we did. Is there a fair value gap we could have gone short at? Yes. So these are basic, elementary ICT concepts, right? But on the H1, we had this rejection block, and just above it, we had C of this old rejection block. And we can mark that through. These are two levels that I was looking at. Okay, so what do we have at that level? Well, guys, we had a goddamn mitigation block. What do we know about the mitigation block in terms of the PD matrix? Who can answer that? What do we know about mitigation block in the PD matrix? Right, so a mitigation block is a line in the sand. Okay, so it's the first PD array that price has to go through if it's going to drive up into a new dealing range or go through into new inefficiencies and imbalances in price, right? So if price is going to get through this is the line in the sand. So if we're in a higher time frame premium, if we have the rejection block, if we're at medium threshold of a daily order block, if we're inside of a daily volume imbalance, if we're inside of a higher time frame premium, if we have multiple rejection blocks at a certain level, and we have a mitigation block, would that not be a high probable low risk entry to go short? Would that not be a low risk, high probable opportunity to go short? Right? Right? How many more confluences do you need? Okay, so when price comes back up into this level, these are A plus opportunities, right? These are A plus opportunities. So when price got up here, this is why I was saying to go short in this level, anticipating and allowing price to wick up into this 5-minute volume imbalance that we had just here, you know, which is the low of this order block. Right, so you know, if you go into 18, 22, what's that? It's like a $30 drawdown. Ouch. Right. Again, this is a classic example of why you would allow a lamb to the slaughter. Partial, underneath this liquidity, down in this order block. Price comes back, tests the position. Why is it doing this? Why is it doing this? Because market makers don't mind people winning a small amount. They can't kill the chicken that lays them the golden goose, right? So you can't not win as a retail trader. Otherwise, there is no market. That's a slight over exaggeration, but you get my drift. Their point for them is to consume retail money. Okay, but ultimately they have to allow them to win little in order to keep the wheels churning on their machine that is just consuming global economy's wealth, right? Which is just fucking retail Larry's money, right? So this is essentially, okay, you got in at the right time. I'm going to allow you to have this trade. Because there's no chance that you are going to hold this all the way back to your position, because you're going to shit yourself and you're going to get out, right? Hello, 2-tick Terry. Right? Hello, 2-tick Terry, right? Because you end up moving your stop just inside your, because you don't want to see, God, the last thing you want to see is price come and take you out of your position. God, that would be horrendous, wouldn't it? So what you're going to do, you're going to move your stop just inside where you got in, and you get taken out for 2 ticks before seeing price move ultimately in your direction. How many times does that happen? Go on, raise your hands. I bet it happens more times than not, right? Well, this is a classic example why you would leave a lamb to the slaughter. So you'd obviously be looking to take partials, pay yourself. I never agree with traders who just don't pay themselves. I think it's stupid, but you know, every trader can do their own thing. And then you can hold position, right? Hold your position and your stop stays above your initial position. It's a lamb to the slaughter. If it takes you out, your thesis is wrong. You move to the sidelines, you reanalyze the next trade. Ultimately, what happens if you allow your trade to run and you don't allow the market makers to pressure you out of your position? Well, you've just capitalized on, if you got 2 contracts, about $2,000 trade. Right? Versus the neophyte who's got out for $50 because they've been pressured on their position and they didn't take partials or pay themselves when they were supposed to. Right? How frustrated would you be if that was you? You got in here, everything perfect, got out with $50 when you could have made $2,000. Professional trader, neophyte trader, right? Learn how, this is what I'm saying. Trading is not just learning ICT concepts. You need to know how to effectively manage a trade management. You and I can get in the exact same trade at the exact same point. I will make money, you'll get out break even though we both got in at exactly the same point. It's just facts. So trade management, understanding how to manage a trade. If you don't know how to do that, I've done a trade management masterclass on YouTube. You can go check that out. But ultimately, price has reverted back to this volume balance, right? So beautiful trade from that mitigation block, moving price from a premium to a discount, discount to a premium, usual fun stuff, right? So for crude, now crude has made that move. I would like to see crude come back down into this inversion fair value gap. That's where I'd like to see crude ultimately reach to today. That's my price target on crude. Come take out all this liquidity and run back into this inverted fair value gap and dip back into this daily order block. So area of reference that I'd be looking at is I'll be looking at, first and foremost, guess what? I'll be looking at 50% of that wick would be a terminus point of where I'll be interested in price getting to. What does that tie into? 50% of that wick ties back into this this inversion fair value gap. It also closes off this BISI. But yes, that essentially that's what I'll be looking for on crude. So yeah, there's obviously nothing for me to take at the moment. You could be hyper aggressive, but I'm not going to. I've no interest in being hyper aggressive. With crude, the entry was up here, so if you got in here, awesome. If you didn't, yeah, move to the sidelines, wait for the next setup. You could look for, you know, a low risk entry if price retraces. You know, wherever that retraces to, you know, potentially. Let's have a look. You could look at, well, it's already rejected it once. You know, you had this breaker block would have been a nice entry, right? After hitting the mitt, nice breaker block entry. Yeah, it's just one of those. I was chatting to you guys, so I didn't do that, but here's what it is. So just neutral on ES at the minute. Still holding runners from down here. Yeah, I could buy into that, Larson. Yeah, if you, it's difficult because I'm not sure it's going to get up there. But I think you know, if you're trading this, you're trading it that's aggressive because you know you'd want to be get price to get into a premium before you shorted it. But There you go for a short, Yazzie. Tell me what you see there, Yaz. Yeah, that's what I'm looking for, Eric. Heading towards the end one, as anticipated. I'm anticipating this high to get taken, right? So, which is what I've been mentioning all morning. A quick look at the RTH gap. Because technically we're going to open up with a gap down, right? Which further fuels the argument for price to move higher. If we just look at this range. You know, for anyone who was long down here, you'd be looking at, you know, equilibrium of the range is your area where you'd be looking to take a partial, right? So inside this SIBI would be a next logical place to take a partial if you're long from this rejection block. This is tiny little hourly volume imbalance that's here now. Stay patient, don't need to force any trades. Where's oil? Okay. Yeah, I'm currently on YouTube at the moment. Options. Jump on that. I'll be just spending the this little morning session on YouTube. Now I'll be jumping back into Red Pill in a bit. Hourly volume imbalance. So the way I'm looking at this, and I'm not trading it, I'm just purely reading this, but this is, you know, accumulation below fair value. Prices moved higher. Back and forth price action, and then sold off with an ultimate target for me of moving back into this level. So what do we have that's below? This is BPR, this balanced price range of sort of 51 level. It's too high risk for me, but you know, the entry was the mitigation block that we were talking about earlier this morning. But this is BPR that we're inside, right? This piece of price action. If you're still in a position, you'll be looking to take your next off equilibrium of the range. That's 46.50. So oil rejecting the BPR. It's $200 if you shorted it. $300, yeah. Well, depends where you got in. $250 if you shorted it. $300. That's what I mean. We can do this all day, every day. This is why you don't need to get agitated. That's why you don't need to get agitated, right? By missing trades. You know, that's the easiest $250 you can make. Right. That's the new weekly opening gap. 58 is the low, Jeffrey. Oh, it's brother 3, isn't it? Brother 3! And 59 is the high. You can see this just doing a Hulk boner. Little rhino move. Certainly wouldn't want to be shorting ES. Right, let's have a look at Dixie, see what Dixie's doing. Dixie is... Where the fuck is Dixie? Okay, Dixie's on a bit of a mish. You've got a mitty here, but I don't, you know, ties into this new week opening gap, 14th of May. It's also 50% of the range. So Dixie goes, oh. Yeah, let's keep an eye on Dixie, because obviously if Dixie respects that level, oh god, and moves low, we can anticipate higher prices on the ES as well. So a quick look at the, we got balanced price range on SPX. Ugh. Interestingly, how NQ's taken the high, NQ's taken the high. Yes, YM haven't. Again, if I'm looking for lower prices, I'd want them all to be in confluence. this huge divergence on YM. Alright, so let's have a look at ES, see what ES is doing. So coming into the open, how long have we got? We've got 15 minutes. Entry was this rejection block on the 15 after everything else that I previously mentioned. Old Sibi high, see if this wick, 62% of the range. Holding runners to see if it wants to go and run back up to the new weekly opening gap. Oil short off the mid block, off of at a premium high time frame OT range. Daily volume imbalance, C of the daily order block. H1 rejection block CE on multiple occasions, lower time frame mid block entry targeting a discount. Bish bash bosh. Continuation from here, looking to see if price wants to run down to firstly this wick, which is 65, and then beyond that down into the inverted fair value gap. I wouldn't want to see ES break this level. Can run, can go down as low as there. Boom, 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 boom. So you've currently got balanced price range on the 5 minute. You've got price taking the buy side. You've got a fair value gap. Price has moved into that, filled it. You know, so you've got your 2022 here on a lower time frame, albeit it's not at the highs. So it's not A plus. That being said, you know, there is an entry model there. And if you were purely just wanting to get your 5 handles, you've not had to work very hard to get it, have you? You know, this BPR down to here, 48 down to 16, bish bash bosh. Thank you very much. Currently just looking for signs of continuation. Neutral on ES, just runners on the off the rejection block. Brother Free, do you know how to draw new weekly opening gaps? Jeffrey, I don't know if you can hear me, broski. Brother Free, do you know how to do new weekly opening gaps, right? All right. Let's have a look. Why has it done that? So, this is for your notes, Brother Free. New week opening gap. Close on Friday. So you'll close on the 1 minute on Friday. Open price on Sunday. So 6 p.m. on Sunday. Right? That is your new week opening gap. So you'll close on Friday to your Sunday open. So you draw the new week opening gap. So this is why I went short here off this new week opening gap the other day when we were up there. And price will often, I like to call them bookends. Right? Oh fuck. Sitting funny, my coccyx hurts. I treat them as bookends. The price will often refer back to them like magnets. They'll be drawn to and from them, right? But in between them, we have RTH levels, right? Which are these green lines. Where were we this time last week on Tuesday? Well, we were down at 44.16, 44.02. That's where we were this time last week, which would take us to, funny enough, C of this wick. So if price wants to melt, that'll be a price target I'll be looking for to come back to this time last week, Tuesday. If price is consolidating, it will often move back to the previous week's RTH levels. Two seconds. All right. I don't want to see ES take this low. If it takes this low, I'll be looking bearish. Okay, so for me, at the moment, I'm just looking for price to respect this level. So if I was trailing positions, right? Obviously, you'd have one to the slaughter, depending on how many contracts you've got, but which should be below your entry, your original entry. But ideally, I don't want to see price go below 36.25 for bullish price. All right, let's have a look at crude. Really nice. So if you got in at 45 off that BPR, there's, you know, there's sort of 400 bucks for you. Lovely, lovely, 400 bucks. Now we're talking. But obviously, if you're still in from up here, you'd be up over 2 grand, wouldn't you? On a couple of contracts, so nice work. If you got in off that MITI that we were talking about earlier. All right, patience, guys. 2 minutes to the open. So I was talking about earlier, you don't need to immediately rush into price. You've got all day to trade. All day to trade, right? The nice trades that we took this morning, be content with that. Be content with this nice displacement that we've had. It's not capturing every single range or every single trade. Got to get that drilled into our mindsets, right? Take a monster trade, breathe, reanalyze, wait for a setup that is A plus again. Sidelines for me on ES, that would take me out my rudder. So we have this H1 order block. Sorry, order block, breaker block. But just neutral on ES at the moment. There you go. What's the level I was talking about? 65. So, ladies and gentlemen, that's your first target on crude. If you went short off the balanced price range, looking for price to get down to 65. Like you see why this, you see why this was a low risk, high probable, not a low risk but low probable entry. Like this is one you can take if you have a lot of money in the bank or you have a riskier account that you trade, right? This is an A plus, but you know, this is a setup in itself, right? This isn't being inside of a premium, displacement, returning to this mitigation block with all the other reasons that we mentioned previously, right? Higher time frame rejection block, blah, blah, blah. But this is another opportunity looking for continuation, right? So what did we have? Well, we had, let's just recap because it's important to go over these things, right? But this is the exact trade you could have taken, right? Which as described. It's a 15-minute SIBI, right? 15-minute SIBI that we're anticipating price to draw up into to rebalance, okay? So prices come back almost to 25%, the lower quad of that SIBI, right? But this is where it's important. This is where experience comes in. This is where we can start reading price action and what's actually been printed. Well, this previous price leg that we had here, if we just draw a fib across it, okay, anything below equilibrium is considered fair value. So at this point, they're accumulating positions. This is the manipulative move, okay, and then price is aggressively displaced lower. So if we jump down now onto the lower time frame, we can go onto the 5-minute. This back and forth price action has balanced this area. So when price has gone up above this range here, this is the manipulative move, right? Before distribution. So after phase or leg 1 of distribution, what are we likely to get? Second leg of distribution. So what we're going to get, reaccumulation, right? Now, this distribution phase above this period of balanced price, once it breaks through this, price has no reason to go back above this if it is bearish, right? If it's going to go run for a lower time frame target that we mentioned, there we go. We just filled our target, right? 65. See if this wick. Target 1. Final objective for today is for it to get down into this inverted fair value gap, right? But to go back to where I was, so this once price breaks through this range, this up and down, if price is bearish, it has no reason to get back above it. No? So we don't necessarily need to be looking at all of these imbalances and inefficiencies to be rebalanced, right? Because this has already done the donkey work for it. So when price is broken through, price is now going into distribution. This is distribution. Price doesn't rebalance distribution. We're now distributing. So we're now distributing those positions that were accumulated. So all of this accumulation, no? So this is accumulation, manipulation, distribution. Distribution, we're going to head down, right? We're going to distribute those longs, right? Distribute this accumulation, right? Make sense? So price doesn't need to get back up here. So when I say it's low risk, low probability, what I mean by low probability is the fact that it's not taking price from a premium to a discount. You know, the neophyte would be saying, okay, well, I'm going to wait for price to get up here for me to then take it short, right? Not every opportunity does that. And this is experience, understanding price, blah, blah, blah. But this is a lower probability entry because it's higher risk, right? It's higher risk because you're not right in at the top. This is a continuation. You're taking phase 2 of distribution, which is always open and susceptible to being whipsawed, right? But if you have money in the bank or a separate account that can trade riskier trades, well, this opens up that opportunity for you, right? To trade these. Now, if we have a look on these time frames, what do we have? Well, this is balanced price range. This 5-minute BPR is balanced price range. Okay? Why am I classifying this specific piece of price action as BPR? Well, as I've mentioned previously, this above it, this up and forth, back and forth price action, anything above this now is just purely manipulative before the distribution, right? So when price breaks through this buy-side delivery, which gets efficiently rebalanced here on the sell side, price has no reason to go back above this, right? This is balanced price. Okay, this is balanced price, right? So what we're looking for is continuation off of this balanced price for phase 2 of distribution. However, we are getting price return up into that 15-minute fair value gap, right? The lower quad of this SIBI that coincides with a 5-minute BPR. This is continuation, right? Target 65, CE of this wick, which coincides with CE of this order block, right? First partial. Now we're looking for our runners to run down into this inverted fair value gap, right? Does that make sense, guys? Does that make sense? You guys get that? Can you give me a thumbs up in the chat if you get that? Oh. Perfect. All right, see if we can get into this BISI now on ES. First target would be looking for the low of the H1 breaker block, 26. Just neutral on ES. I'm just watching it. I'm not trading this. I don't like where it is, right? But I'll be looking for 26 for price to get down into this 15-minute BISI, which coincides with this hourly BISI inside of a deeper OTE inside this H1 breaker, right? Looking for 2 times standard deviation as low-hanging fruit, which is 27.50. Right? And then below that, as I mentioned before, the lower quad of 24.50. So this is why it's important to be nimble. Jack be nimble, Jack be quick, right? Remember I was saying keep a reference, keep an eye on this balanced price range, right? How price is respecting this balanced price range. Let's have a look at crude. So this is crude now in distribution, right? This is phase 2 of distribution. So if we are anticipating this as accumulation, manipulation, distribution, we're anticipating price to drive lower, right? We don't anticipate price to have a need to come and rebalance all of this. I'm not, when it gets down here, sure, it could do that. But our objective at the moment is for it to run down into this inverted fair value gap. Now, if you were in off this mid block, 72.21, you're up an absolute monstrous amount of money at the moment. 2.5 grand, right? On one contract. Is that right? I just worked that out right. Maths might be a bit shoddy on that. But. So just looking at CL to do its thing. So this is when you enter a trade. Now you're just submitting to time and price, right? So now you've entered your trade. Now it's just a case of managing it, right? So we've already taken a partial off at C of this wick. Now we're just wanting to see if price wants to run down into this H1 inverted fair value gap where we're looking to find support, right? So where we'd be looking for price to show signs of support, and then we could look for a potential reversal or retracement back into the range, right? But for now, we're just submitting to time and price. We're not getting nervous. We're not getting anxious. We're not doing any of that. We're just submitting to time and price. So where would I be looking at a next objective for me to take partials? I'll be looking at 70.10, which is CE of this order block's wick, which is, guess what? Inside of this H1 order block. The fuck am I talking about? Which is inside of this inverted fair value gap, which is also a fill of this BISI on the hourly, right? So that's what I'm looking for CL, right? Taking price from a premium to a discount. So where does that sit? So if we go up to here, equilibrium of the range, 70.15. Okay, so if you want it to be really anal, you could go at 70.15. But that is what I am looking for CL. Great stuff, Larson. Well done. So, guys, I talked through this trade live. I've talked through every single trade. I've probably given you 6 or 7 trade setups since this morning's live session alone, right? Ahead of them happening, before they took place, right? It's up to you to press the button. But I've been absolutely clear on what I'm anticipating price to do. This is not by luck. It's not by chance, right? And what I'm saying is there's no difference between me or you. The only difference is application. So you will get there, and you can get there. There's no reason why you can't trade like this. Just be patient with yourself, right? Don't stress out if you're not quite there yet. It will come with time, all right? But you have to allow yourself that. You have to be patient enough with yourself, right? Don't get caught into this. Don't get caught into this horrendous mindset, which is fucking Twitterville, right? It's why you don't often see me out and about all over the social media. I fucking hate it, right? The amount of Twitter clout chasing garbage that I see out there where they still live with their mum is ridiculous, right? Focus on yourself. Focus on you. Right? Don't get distracted by what anyone else is doing, right? Just focus on yourself. And if you're looking to be surrounded by a good group of people and people who are all equally minded, where you cut out the noise and you're dialed in and you're focused, that's what essentially Red Pill is. And obviously I trade live every day and we have Red Pill University, but you guys, it's not a plug, but just letting you guys know where you can find me, because I'm not a Twitter basher, right? It doesn't help anybody. An old chart of saying this is ICT Silver Bullet on a demo is not helpful, right? How do you find that real time, live, in the charts? That's valuable. Not a previous review of a ICT Silver Bullet and post it on. What does that mean to anyone? It's like going to a friggin' art gallery, right? Picasso, is it a Picasso? Is it a Rembrandt? What is it? Okay, how do we find this real time inside the charts? That's what we do. That's what we're about. Real fucking time inside the price action, calling it live. That's the difference, right? That's the difference. Not I can create a beautiful chart template, like Rembrandt style, regurgitate some ICT shit and post it on Twitter for a like. Don't get caught into that trap. So guys, what have we just hit? Bingo, bongo, bango, right? So from, if you got in at 71.50, down at 70.40, there's your 500 bucks. Thank you very much. If you're in at this mitigation block that we were talking about earlier, well, you're just short of 3 grand. There you go. Passed your valuation in one trade. Now, if you're still holding runners, now anything here is just a Brucey bonus, right? Now it's just a Brucey bonus. If the price wants to melt beyond this, then you're just laughing, aren't you? Right? But guys, that is calling price action live to a T. Cheers, Ansley. Cheers, appreciate that, brother. Hey. Assume I'm saying that right. It's very weird because it's very, your name is very similar to my real estate business's name. My real estate business is called Annesley Property, so it's spelt slightly differently. So if I'm saying it wrong, I apologize, but it looks like Ainsley Property, Ainsley Welling. Sorry, but you get my confusion. So right, now price is down inside this inverted fair value gap. Guess what? This is where you go and walk the dog, right? This is where you say, I have just smashed out. What did we say? What was our level? C of that wick. So we got out at 70.10, right? We got in at, so 400 bucks. Say you took two contracts, $800, right? You just made $800. This is where you just go and walk the dog. You've just made your money, right? You go and read a book. You go to your study den. You go and do some back testing. You go do something completely different to wanting to press this goddamn thing again, right? We don't want to be doing this. This is the addictive drug. This is the needle in the arm. Don't keep pressing this. We have achieved our objective for today. The amount of times I see in other channels or other whatever is, now what? Now where do we go? Puts, pulls, calls, puts. Neophyte, average. You're average. Stop it. Right? Stop it. Bam, 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 bam. Get a grip. Right? Price has done its objective. What am I anticipating price to do? Reverse back up into this range. Right? This is an example where I know what's about to fucking happen. But am I going to trade it? No. Because I don't fucking need to. I don't need to trade it, right? We've just spoken, we've taken an A+ setup. We didn't get that. We're talking about a B+ setup. You know, we could have taken that. If you took it, great. If you didn't, so what? You've now had 2 opportunities on oil alone. That's not even talking about the trades we took this morning on the buy side. How many trades you need before you become satisfied with enough is enough? ICT talks about this all the time. Enough is enough. And that's just a fundamental rule of trading. It doesn't necessarily have to come out of his mouth. It's just a general principle. I know where price is going. Do I have to trade this? No. Right? This is what encourages over trading. Right? Sure, you've seen me do it 1,000 times, trading every single price swing. When I'm just in a dick mood and I feel like doing it, I'll do it. But I don't have to do it. Right? I don't have to do it, and you shouldn't have to do it. You don't need to do it. Right? You wait for your A+ setup. You do top-down analysis, which I've literally explained to a T since this morning's session. Repeated it numerous times. You do top-down analysis, you wait for your entry, you execute, you submit to time and price. You get your trade, you're done for the day, right? If you want to come back and look for a PM session to trade another account, so be it. But if you're literally going, oh, I'll trade this, oh, I'll trade that, oh, I see this, oh, I see that, oh, look at this order block, oh, is that a fair value gap? Boom. Right? It's over trading. You're going down that neophyte route where it's not a professional trader's mindset. You're trading like a novice, right? So don't ask me where is crude going next, right? I have no interest in answering that question. I just told you where it's going, but are we going to even consider it as a trade? No, we're not, because we're content with what we've done, right? We're content with this. Enough is enough, all right? But this is, if you didn't, in hindsight, if you didn't take this trade, you could have looked at this as an area to go long. So, as I was talking about, neophytes will chase price. Now they're trying to run this short. The reality is price is likely to draw back up into this range. Now, if you were, what am I trying to say here? If you didn't take this, you could have looked to have taken a trade inside of this lower quad, which is what I was saying, was it not? Where's my 15-minute? Am I even on the right thing here? Right, you could have, sorry, I've just gone off piece. You could have looked for wait for price to get down into what? A discount, right? Premium to discount, discount to premium. So I only long in a discount and I only short in a premium. Guess what? I would not be looking for longs anywhere in this. Now, where would I be looking for longs? I would be looking for longs inside of a discount. Now we can start framing reasons to why price will go long. Guys, this is not difficult. Well, it is, but I take that back. It is difficult. But with time and experience, it becomes a lot easier, right? This is an inverted fair value gap, right? Below this pivot high, inverted fair value gap, draw it across your chart. Now, when price is in fair value, would it not be realistic to anticipate price to respect this level? Now we're inside of a discount, we have an inverted fair value gap. Guys, if you took this 69.92 to 44, that is another 500 bucks. Literally just trading that pullback into the range. Right? What could you have looked for? Price is doing what? What did I explain at the start of this session? Price is going to rebalance inefficiencies or imbalances in price, or it's searching for buy side or sell side liquidity. Right? So what do we have here? We have sell side liquidity. Right? So has price taken sell side liquidity? Yes. Yes. Yes, it has. What do we have here? We have an inefficiency in price on the 15-minute. What is the 15-minute? The 15-minute is our bellwether chart. What have we hit to a tick on the 15-minute? We filled in that inefficiency in price inside of this displacement leg after taking sell side. So price is taking sell side liquidity and searching for inefficiencies in price. Well, it's taken the sell side liquidity. So what's it searching for to rebalance, or what could we have framed inside of the higher time frame inverted fair value gap? Because don't forget, we're framing the higher time frame down to lower time frame. So we have this inverted fair value gap. So this is the range we're looking within. So we can, just for shits and gigs, just copy it and I'll paste it onto this chart. Our eyes are drawn to what have we got inside of this where we can frame a long, right? We're not looking here. We're not looking here. We're looking inside of this inverted fair value gap on the hourly. So now we've just dialed it in. A lot of people will go, well, okay, we've got an order block down here. We've got a little inefficiency down here. No. No, no, no. Right? Top down. So inverted fair value gap. We're operating inside this. This is where we're looking to see where price is likely to respect it. This is where we can take and look to frame our entries long. Well, what did we have inside of this? We had this inefficiency in price on the 15-minute. You can say this is hindsight, but rewind the video later if you want. I'm pretty sure I said 1,000 times we're looking at this H1 inverted fair value gap as a price target, right? So look, if you didn't take this price leg down, and I didn't, or I'm saying if I didn't, I could be looking for areas where I'd be looking for price to drive higher. Well, this inverted fair value gap inside at fair value in and around equilibrium of the range, inside this inverted H1 order block, what do we have? H1 fair value gap. What do we have? 15-minute fair value gap. So an imbalance or inefficiency in price, because it's efficient in its buy side, but it's been inefficiently rebalanced on its sell side. So it's been printed on the one side, but not on the other. So price has come and rebalanced that 15-minute inefficiency in price, right? To the tick. Now, we're anticipating price to draw up, to get pulled back up into that range, right? These types of move, right? When these types of stream, when I'm going opposite to the day's directional bias, I am certainly not looking for range. I'm looking, that is like scalping conditions, right? The trend, you'd have heard it 1,000 times, right? The trend is your friend, right? So the trend is your friend. Sorry, Ansley. There's the link, brother. So the trend is your friend, right? So I don't want to be looking for price to drive all the way back up here because of everything I've just mentioned previously, right? In terms of reading this price, this is distribution. So where's price more likely to go? It's more likely to fuck about in this range. If anything, it's gonna push through into a deeper discount, right? But that being said, this is where I would be looking to frame. What am I trying to say here? This is where I would be looking to, in a sense, scalp. Right, so if I was going anti to the day's directional bias, I'd be looking to scalp. Okay, so what would I be looking at? Well, I'd be looking at this inefficiency in price, right? So this 15-minute, and I'd be looking at the quad, and I'll be content with paying myself with inside this. So whether it's 70.64, which takes us back up to this wick, so CE of this wick. This is where I'd be looking to take the majority of my position off, if not already, right? So coming out of this H1 inverted fair value gap, going against the daily bias, looking to take low-hanging fruit objectives. And then sure, if it wants to keep driving on through that, then great, I'm in it. But if I'm going anti today's directional bias, then I certainly don't want to be trying to overcook it, right? I don't want to be trying to overcook it. Right, that's just how I trade. You can trade differently if you want. You don't have to trade exactly like me, but this is how I trade, right? This is how I've become successful, right? I don't like to be bullish against the day's directional bias. Now, we can talk about what Larson mentioned earlier. So Larson quite correctly said that, could we look at this as my 3 drives pattern? So for those of you who know my 3 drives pattern, we're looking for extended price action inside of a premium into a higher time frame premium PD array, right? So at this instance, we came to median threshold of this daily order block, bearish order block. So in theory, Larson is correct that this is a bearish order block. Fucking hell, I'm mixing my words and I'm getting tongue-tied. So this is a 3 drives pattern into the higher time frame PD array. So if you don't know what that is, you can check out my video on YouTube. So we could, and I'm not saying I would trade this, but you could anticipate price to eventually get up here for a potential re-entry short. Would I trade that? No. If price got up to this level, would I consider it? Potentially, depending on how price was respecting that on a lower time frame at that level and whether we had further confluences, right? But in theory, price could get back up to this level just purely on the principle of my 3 drives pattern, right? But would I want to trade up to that? In this instance, no, because just pure experience with this being quite clearly aggressive in its distribution, right? If I was going long out of this inverted fair value gap, I would be looking for low hanging fruit objectives to take my position off, right? Because I'm anticipating price to consolidate inside of this H1 fair value gap, this inverted fair value gap, right? I'll be looking for it to consolidate here, right? And if I was to look for further continuation, you'd want to see this respected on the 15-minute, right? We had this nice rejection we had this nice rejection out of this level, but you know, I'd be seeking more confluences, right? But again, this is the time when you go, okay, enough is enough, right? Enough is enough. What do you have here though? You have a little fair value gap. Let's have a quick look at the 15. So it's not something I wouldn't want to take this. For me, I wouldn't want to take this as an entry, right? Because we have if I'm taking an entry, you know, if I'm taking an entry, I'd want to be at 50%. So you can see, like, this is, you know, this is when people get upset when they're trading 2022s, right? Like, this is a classic example of when it wouldn't be a good reason to take one, right? This is like a classic example of when it wouldn't be advisable to take a 2022, right? Right? We're anticipating price. We're in distribution. We're anticipating price to drive lower. Am I looking for it to support and hold inside this inverted fair value gap? I'm looking for it to hold support in this level to show signs for it to reverse. Yes, I am looking for that, right? But could price dip down into 71 before pulling back up into this inverted fair value gap? Yes, I need more information. I need more to tell me that this is being respected on a higher time frame. We can't just have one candle into it when we're quite clearly in a distribution cycle, right? This is a low risk. This is a poor 2022 entry model, right? If we're looking at these, we want to be at a discount. We want to be at a deep discount, right? Fair value, 50% is not a deep discount, is it? No. So this automatically becomes a C+ at best entry, right? Because we are not inside of we're not inside this optimum trade entry, right? It has come down to this inverted fair value gap high, but all of this is not where I would be looking to trade long. Okay, so I think we've had enough of oil, but amazing trade, right? We've taken it from this MIP block in 2 stages, talked it through clearly all the way down to this H1 inverted fair value gap. Target done for today, right? Objective done, right? No more crude. Crude is done. Okay, so now let's go back to ES. So let's have a look at what was happening on ES. So what was I talking about on ES, right? So, pardon me. I'm expecting this to rally, by the way. Let me just give me a second. Oh, good stuff, Ainsley. Nice one, brother. Well, welcome into the family, mate. Make yourself at home. If you have any questions, feel free to reach out in the lobby. Most people, well, people are helpful, so you know, we're just one big family, basically. So if you have any questions to ask, feel free to ask. Right. Okay, so 2 times standard deviation is what I was looking at. So where have I got 2 times standard deviation, I hear you ask? Right, well, 2 times standard deviation, let's break it down. So 2 times standard deviation is from this retracement. Okay, so price, AP, I'm on the YouTube, brother, if you're wondering where everyone is. I'm on the YouTube. So if price runs down and returns up this retracement before the aggressive displacement, right? This is the leg that I'm using to project standard deviations from. Well, we have 1 times standard deviation, and you can see how price, to the tick, respected 1 times standard deviation before retracing, right? We then have 1.5 times standard deviation. If I do that once more, I'm going to kill myself, right? So then price came down that before getting a nice retracement. Wow, God, I keep hitting it. So I'm looking for 2 times standard deviation. 2 times standard deviation is a level where we can expect price to respect it, right? Below that we have 3 times standard deviation, but that would take us below this 15-minute BISI that I'm currently looking at, right? So let's have a quick look at the 15. Let's see what we've got. So we've got this 15-minute BISI. We've got the 2 times standard deviation as previously mentioned. We've got this upper quad. And it's still inside this H1 breaker block, which would dip us into this. We've already dipped into it, to be fair. Dip us into the, well, we already dipped into it, but get back into this BISI on the hourly. Let's just get rid of this. But the trade this morning, this balanced price range that I was mentioning, right? So what I'm keeping an eye on is this BPR, right? So if price gets back above this BPR, I'll be looking for it to hold, for it to show signs of continuation, right? But if it wants to get back up there and rejects, then I'll be looking for it to show signs of continuation. It's a downside, right? But when I talk about top-down analysis and looking at levels in a higher time frame, so if we go back to, let's go back to this level here, right? What we had at this level right here. So at this level, we were at the upper quad of this BISI, right? Which was also CE of the weekly wick, right? So just for completeness sake, this wick, 50%. So we had stack confluences at that level, right? Okay, and we're looking on the lower time frame. Now, when price ran higher, Where were we this time? Where was this? Look at my daily chart. At equilibrium. So 50% of this range, right? Then, when price ran up into this BPR, where were we on this occasion? The lower quad. So all of these stages, they've just been rejecting the different quad levels inside of this daily BISI. Right? Mind blowing? Is your head exploding? Okay, so
Ah, posh!
so that's my trade, right, guys? So that's my ES trade. So for those of you inside Red Pill, I don't tell people when I'm taking trades. It's for you to take trades. I'm more than happy to explain what's going on, what I'm looking for, but I'm never ever gonna just sit here and go trade. It's just ridiculous. It's just, you'll never develop as a trader like that. You need to develop when to press button. If you want to join a signal service, go and join a signal service. I'm not signal service. No intention of being one. So now and again I'll do it. Now and again I'll drop bombs, but not all the time. But this is oh shit. It's my trade. Right? So just so you know, I practice what I preach. 38, not the best entry. So in fact, it's a sloppy entry because I'm half talking to you whilst trading. It's not the easiest, but my stop was above this balanced price range. Okay, looking for price to run down to this 2 times standard deviation. Okay, ES trade done. Okay, 38 down to 25. Taking a partial at 31.75. All right, 31.75. Guess what? Where was that? Low. Low. Where the liquidity was. Okay, so if I'm looking for continuation, this is where I'll be reverting to these levels on the new day opening gap. So Tuesday takes us down to 16 and 402. So these would be the levels that I'll be looking at. What I usually do is I go like this and I make it purple. Why are you not going purple? Right, so this is where I'd be looking for price to draw into. This is last week's RTH levels, right? So if I'm looking for price to draw down, this is where I'd be looking for price to get to. Okay, and this is essentially providing fair value to market makers, okay? Because this is going back to this time last week's price. Okay, so where would we anticipate price to find a level of support? Well, this time last week, right? This time last week. So, you know, for price now to show signs of continuation, I'll be looking for it to get down into this level. So I would not be looking at any trades long unless we got down into this level on the RTH. Aye. But we have, let's have a quick look. This is purely continuation trade now, guys. There's absolutely nothing I'll be doing trying to bounce this yet, right? I would not be trying to bounce this. If you want to try and look for a long, you'd be looking at 11:30, right? So a London close reversal to take price back up into this range, right? I can see this melting. All right. Now, if you want to, with it, essentially we'll be left with a hammer candle on the daily, right? So I'm anticipating, you know, the candle to close. If we just want to try and replicate what the daily candle will look like, I anticipate it to, you know, look. Where's you get the drift. Don't know why it's being ridiculous, but you get the drift, right? Hammer candle, shooting star, whatever you want to call it. Take your pick. Okay, so that's gone through the 15-minute. But there's nothing at the moment that I'm interested in. 3 times standard deviation would obviously be the next price target for me. Yaz, I don't know if you're here, Yaz. But Yaz, I know you like these as well, right? But this is right. This is why I formed that BPR, right? BPR inside that range. Look for it to be as an opportunity to go short, right? You're looking for, you know, just combine it with other ICT concepts, right? So you have this buy side, swept, displacement, return up into this BPR inside this broadening formation, right? Stay patient, brother. I saw you getting slightly early, right? Stay patient. Okay, so we've now hit the Tuesday high. Getting a major melt now, aren't we? So 3 times standard deviations, 4408. Interesting in fact. So, as the guys are mentioning inside of Red Pill, we have this volume balance at 22. Oh, they were looking at this one. We got one slightly just below it here. I just wouldn't want to play bouncers at the moment at this level. Yes, we're inside last Tuesday's price, and funny enough, you know, what have we hit to a T? So this is last Tuesday's. Brilliant, Yaz. Well done, mate. Great work. Good stuff, Yazzie. So this isn't something specifically ICT has taught. This is something which I've developed using RTH. So you're not going to find that with his teachings. But. But for me, this is like you don't need to be trading these bounces, right? You don't need to be trading these as bounces, right? This is like a contrarian's nightmare, right? This sort of price action is where you get chopped up as a contrarian. Just don't do it. Just if you missed this entry, Move to the sidelines. Simple as that. You know, don't try and force your will on the markets. If it's running, just so be it. If you're getting frustrated now and you're a little bit agitated, guess what you go and do? You go and read a book. Don't let the devil in. Go and close the door. Right? Close the door on the devil. Go and sit in a quiet room. Breathe. Come back calm. Right? Just come back calm. If you've missed this move and you're even slightly agitated, you've got to work on that. Right? You've got to get out of the room, take yourself out of the environment until you can trust yourself. If you're like, ultimately the devil is trying to get into your trading and you can't allow that to happen. Just go away. Just leave. Come back. If you miss the trade, you miss the trade. It is what it is. Guys, if you yeah, do you remember FOMC last week, Yazzie? Woo! Oh, I was I'm human, right? I'm human. So, you know, this has the potential just for an absolute melt. If you're still in the trade, you'd be holding runners, obviously. Please don't chase price. But you could be looking at this daily as a potential target. Will I want to be trying to bounce this? No. So guys, what are we down in here? Oh, that's oil. So oil is at what? Oil is at the low of that H1 fair value gap. Remember, wicks do the damage, body tells the story, right? So I'll be looking at how this hourly closes. I'll be looking to see how price respects this area, right? This trade has done, you know, we're just watching price. We're waiting for the next setup, right? Right? We're waiting for the next setup. We're not forcing it, right? So keep an eye on how price respects this inverted fair value gap on crude. Certainly not trading. If it breaks through, so what? Alright, so 3 times standard deviations, 4408, which takes us to the low of this H1 order block. Takes us to C of this wick. We're still inside of a big old premium. If I'm honest with you, this is like the type of day where I would prefer to be on side. So I'd prefer to be holding runners and just wait to be proven wrong versus trying to go counter to the daily bias, right? So I'd prefer to be holding longs and then get stopped out if it breaks a level versus trying to bounce it. But I sold way too early. I sold way too early. Am I angry? No. It's just how it is. I didn't have enough contracts to hold through, but I paid myself at my levels where I wanted to get paid. Am I happy with those trades? Of course I'm happy with that trade. You know, could I have extracted more out of it? Sure. And, you know, like ICT, you know, once you get proficient at trading, it comes down to, you know, how you exit trades. It's not so much how you get into trades, it's how you exit trades, right? And that's where you get frustrated. Guys, if you like this stream, consider smashing a like on the tube if you found value. Currently 18 of you at the moment, 13 likes. So some of you just being moody little basts. Just go over to the little like button and go boop. It'd be appreciated. It'd be appreciated. It's 14. It's just 4 left of you. 15. 3 left of you. Come on, don't be that guy. Don't be that guy. Don't be that moody little one. 6. There's 2 of you left. There's always one in the community who's just a little bit weird, right? Oh, whoever that is, that's you, right? Oh, how's that happen? Jesus, how have I got 19? There's only 18. How's that work? My maths is what? How's that work? Someone got 2 accounts up watching it. That's hardcore. That's extreme. I guess it's someone who's been here before then left, right? Or someone's dual screening this shit. You better not be recording it. I'll come after you. I'll hunt you down. I'll find you. I'll do some of that taken shit. I will find you. I will kill you. Do a bit of that. Right? Don't you be recording it. 17 views. Oh, we lost. What? 21? I'm losing. This is weird. Well, I appreciate it. Thanks, guys. All right. Oh, how about that? How about that? How about that? Little H1 fair value gap. Right, YouTube, that is going to be it for me today. I hope you found value. If you've not earned something, you're learning, but I probably talked through about $6,000 worth of trades today that you could have taken. Coulda, shoulda, woulda. But in time, you'll be able to do it on your own. Right? You won't need me. You won't need any douchebag on Twitter. You'll be able to do it yourself. All right. So if you found value, that's awesome. Hopefully, I'll catch you on the next one. But until then, I'm going to jump back into Red Pill. But you know the levels that I'm looking at, what we've spoken about. So just watch price. If you're not confident, just watch price. And if you see devil knocking on your door, go and take yourself out of the environment, guys. It's a huge takeaway and massively, massively underestimated. All right. So, guys, until next time, trade safe, trade smart. Peace.